Hello, everyone. Pat Smita here with your Wednesday, March the 19th interest rate update. Now, today was Federal Reserve Day. The Fed has said they're not going to increase interest rates in this meeting. They're anticipating two interest rate cuts this year. They do see the economy, for the time being, growing at 1.7% this year, which is a noticeable reduction from what we saw it in the previous administration and last year. At the same time, they are going to reduce the quantitative tightening program, which means they're going to put more money in the economy so they can work. And they said the word that uncertainty around economic outlook has increased. This all tells us that they're worried about the economy slowing, and they're signaling to the marketplace that they're willing to do whatever it takes to keep the economy humming along. Now, as you can see right here, this is the meeting that happened today, and they held rates steady. They didn't lower it, but they're setting the expectation that they're willing to do whatever it takes, including lowering interest rates, to keep the economy going. At the same time, we got what's called the dot plot, which is where the Fed members are thinking about where rates are going to be. Now, a majority of them through 2025 are anticipating rates between 4.5% and 3.5%. So if they cut rates theoretically twice, we could be as low as 3.5% on the Fed funds rate by the end of the year. But the most interesting part is they're anticipating continued interest rate cutting through 2026 and 2027, and that's the really interesting part about this, is that they're anticipating slowness going forward, and they're going to be cutting interest rates, which is great news for real estate. At the same time, today we had a nice bump up with that news. As we can see here, mortgage-backed securities close higher. Remember, when mortgage-backed securities close higher, interest rates fall. We crossed a key level today that we've been stuck at over the last couple of days. So technically speaking, if we can hit this level right here, we can see some really nice movement in interest rates. At the same time, we saw the same thing happen on the 10-year bond yield. Remember, when yields fall, interest rates fall. And we see the same thing right here where the bond yields fell to a key level today. If we can break through here and hit this level down here, then we can really see some nice interest rates move. But technically speaking, we're setting ourselves up for lower interest rates in the next couple of days. Finally, the scenario that we've been talking about, which is a 20% down payment, the 7-year ARM fell a little bit today to 5.625 from 5.75 yesterday. And that kind of shows in the technicals that we showed you today where the mortgage-backed securities close higher and the 10-year bond yield close lower. So keep an eye out on this because we do think rates will keep falling. And finally, if you like the video, please follow us, like the video, comment, and share with your partners and clients. And we look forward to speaking with you.